Hey guys, welcome back. It's Alon here, and this is AcornProductions. I do apologize today, I'm a little bit under the weather. I think I might have a cold or something, but I can't miss this week's video. It's really important. This week we have essentially almost completed, I think there's one holding to go, the portfolio that we will have into the new year. We've essentially changed a few things with the portfolio, and I'm very proud where we are right now and where we're going. So I'm very excited to let you guys know what's going on. Let's jump into things. Let's have a look at what the portfolio is looking like. Just quickly, we will have 20 holdings soon. We have one holding Vici that we will be buying soon. And essentially, I have been looking over this year and thinking, what's wrong with the strategy? Why are we not achieving 20 to 40%? That is my goal. And I've had a few realizations that I've fixed up for next year, a little bit of flaws in my strategy that I will admit. And essentially, let's get started so the video doesn't get too long. Let's start with our reserves. Let's check what it was, what it will be. So going into this, remember the reserves was 20% of the portfolio. Remember guys, my portfolio is 4 different sections: the reserves, the chest, the 2 horns. The reserves are essentially to stabilize and support the portfolio. This is what it was essentially half a month ago. So it was a little bit of gold, 20% of gold, a little bit of silver, a little bit of corporate bonds, a little bit of government bonds, a little bit of other bonds. This is essentially what it was before. And this is what it is now. So we kept the silver and the gold. We lowered a little bit, so it's only a quarter now. We've kept TLT, which is long-term bonds. I think they will perform quite well when interest rates do go down in the future. I do foresee them coming down at some point. I think that'll do well. I want to hold that. That's essentially cash. This is essentially protection for the portfolio. And this is now a new section. So I do want this 20% of the portfolio to do something for us. Before, it was just sort of a hedge for the rest of the portfolio. But ideally, if there's a chance that this part of the portfolio can perform, can give us 10% a year, this is something that I do want to contribute to our portfolio. I was thinking about it. I don't want it to be just dead weight. And I was thinking about the role of the reserves. And I do think cash flow would be a nice role for the reserves, because the rest of the portfolio isn't really focused on cash flow. What I mean by that is dividends. So I know when people copy on etoro, the dividends is going to go into your account, not necessarily reinvested in the portfolio. But that's not really an issue. Dividends, however they go, whether you choose to reinvest them or not, it's still very valuable. So this section here, this 3/4 is all essentially, they pay a really good dividend. This is around 4%. This is around 6%, 7%, and this is around 10%. So these two are essentially real estate holdings. So these now represent, essentially, it's 50% of the reserves, which is 10% of our whole portfolio. We now have a stake of real estate. Now Vici is a company that I've heard a lot about. Essentially, it owns a lot of the gaming, the casinos, Las Vegas, all of that. And this is another real estate holding. I've had a look into both of these. Perhaps we'll go into it later when we have more time. But essentially, I've done quite well. The day I bought that almost always up 10%. That's quite funny. I'm still looking to enter into Vici, so that'll be our 20th holding that you don't yet see in the portfolio. But essentially, this will be cash flow, and then this will stabilize the portfolio, and together they'll provide cash and stability to the portfolio in bad times. So in bad times, obviously gold and silver should do good, and TLT should do good, because in bad times the government will lower the interest rate. So that's the logic with that 10%. And these should always be providing us cash flow in good or bad times. Now, I'm not really looking to sell that. That'll just probably be a 10% of the portfolio that I'll work on. But essentially, I want the reserves to stabilize the portfolio and support. And I've been thinking about support, and I think support is cash flow. We want that to flow to the rest of the portfolio, essentially, as the rest of the portfolio will give us gains. Remember, when we have gains from other part of the portfolio, more and more money will flow into the reserves. The reserves don't need to make money to grow because the rest of the portfolio will grow. And when we rebalance it, the reserves will naturally grow. So we want that positive loop with the reserves flowing with their cash flow back to the rest of the portfolio. So that's how I see it logically in my head. Those are the changes with the reserves. Now, more importantly, the biggest change has been the chest, guys. So before, the chest was essentially, my strategy was diversification. It was, as you can see, a dependable core of the portfolio that grants stability and consistency through diversification. So if we have a look, we essentially had ETFs. We had 8 ETFs. We had an India ETF, a non-US ETF. I was diversifying from the US. We had pretty much the S&P 500. This is literally the market. These are all great investments, I guess, but the problem with this, guys, is that I'm essentially trying to beat the market. And 40% of my portfolio was the market. This is essentially the market. Some of these ETFs might perform better than the VU, let's say the semiconductor, the tech ETF, but essentially the India ETF and the non-US ETF are going to underperform. So essentially, this is essentially just a diversified market tracker. And I'm essentially what I realized was I'm putting too much pressure on the horns, those high growth parts of the portfolio, to give all my portfolio above average returns, where essentially the core part of my portfolio wasn't carrying its weight. All it was doing was tracking the market. And I'm not making this portfolio to track the market. You guys can buy VU. VU is a great holding if you just want to track the market. But that's not the value that I'm offering you guys or myself. Really, that's not the point of doing this portfolio, just to get average returns or just track the market. That's not what I'm trying to do. So I've been thinking about it, and we've changed the goal, the core strategy. Remember, this is 40% of our portfolio. It's weighted heavier than any other part of our portfolio. So what I've done is I've thrown diversification out the window. Diversification is for staying rich. I've decided to hold only 4 holdings. I've back tested these holdings to essentially what will, according to the back test, we can go into that in another video, but it should net us around 50% a year. Most of the rewards should be coming from Tesla. I think Tesla has an exceptional track record. I think it's on track to continue doing good. I don't see any of that changing. I see Microsoft and Apple exceptional companies. Now, the reason Apple is a smaller holding than the rest is quite frankly because I've got Berkshire Hathaway, which has a huge investment in Apple anyway. So don't think that I'm forgetting about Apple. Honestly, like a third of Berkshire Hathaway is Apple. So just think about these 3 as equal, essentially. But Berkshire Hathaway is essentially a balance to all of these other ones. I see it as the safest one here. Microsoft is just exceptional, and Tesla, I mean, Tesla's been outperforming Bitcoin. Tesla is just amazing. I like Elon, I like Microsoft, I like Apple, I like Berkshire Hathaway. These are all companies that I can close my eyes, go to sleep, and not change my investment in 10 years. And that's what I like about these. If we think back to the military strategy that this is all based on, the chest should essentially be my most dependable, my most reliable fighters that I can send to the front line, and I know they're gonna do good, and this is essentially what I'm looking for. I'm not looking for hundreds of thousands of companies that are just, some of them are good, some of them are bad, and it's just a bag, and we'll see what we'll get, which is what I had here. So essentially I've strayed away from diversification, and I feel good about it, guys. I feel good about these mix of companies. You'll see that reflected in the portfolio. So if we do it by our highest, we'll see we got Tesla. So you see that big 40% of this is essentially 16% of the whole portfolio. And then we got Berkshire. So you see, it sounds big, but still in the grand scheme of things, the biggest holding is 16%. It's not that big. But I've realized that I want my chest to start carrying its weight. And this is what this change is about, guys. It's about it carrying its weight. It's about outperforming the market, because there's only one part of my portfolio where it's acceptable for it not to outperform the market, and that's my reserves, because the goal is not to outperform the market with that. But I need not just my horns, not just the high risk part of my portfolio bringing the returns. It's not going to be good enough for my goals. So this is what this change is about. I'm very, very excited about it. Now, moving on, there has been some other changes with the left horn. This is all less notable than before. So this is what the left horn was before. I had Estee Lauder's, I had a Porsche, I had Microsoft, Google, Amazon. Obviously, I've kept Microsoft, and I've kept all these three actually. But essentially, the changes are we've kept Amazon, we've kept Meta, we've kept Google. So we didn't have Meta before. We've added Meta. We've kept Amazon, we've kept Google, Microsoft is now in a core holding. We've added Nvidia and Facebook, Meta here. We've axed Estee Lauder's and Porsche. We don't need those, they're not going to beat the market. And then these have stayed the same. MicroStrategies and Coinbase. These are companies that revolve around crypto, giving us a little bit of extra exposure, but they're not necessarily as risky as crypto. But besides for MicroStrategies, it's kind of similar to investing in Bitcoin. So essentially we've changed part of this 10% here. And just quickly to recap, guys, if you didn't know what our right horn was, that hasn't changed. I'm very happy with my right horn. I changed it last rebalance. It's 50% Bitcoin. Essentially the right horn and the left horn, if you guys didn't know, if it's your first time tuning in, they take extra risk for extra rewards. So they've been succeeding up until now, but they've been almost all of the rewards from the portfolio. So we want that rest of the portfolio carrying its weight as well, not just being dragged by the horns, which have been doing their job. So it's no complaint to them. But the portfolio here, it's essentially its own little portfolio within within the main portfolio. But this is all crypto, so we're really limiting crypto exposure to 20%, which I think is a nice amount. We've got Bitcoin and ETH making up 70% of this, which I think is very reasonable. Now essentially, guys, my opinion, if you didn't know, is Bitcoin is a first generation crypto, Ethereum is a second generation crypto, and these are all third generation cryptos besides for Matic, which supports ETH, but I think DOT and Algo specifically having that third generation sort of crypto ideal. That's the way I view it. But all of these are essentially our crypto portfolio. I like all of these. I'm not too interested in changing. I mean, we could add a few small ones, but it's not really relevant. The main thing is Bitcoin and Ethereum, and these small ones are just some extra exposure into what I really like. Particularly Algo being my favorite, guys. Scoop some up, use it yourself if you haven't tried it. It's actually a great technology, price aside. Now, coming up to wrap this up, guys, I don't want this video to go too long. Remember, we're going to add one more holding, Vici. I've got an order on that. We've got a bit of cash. I might put it into a little bit of something else. But essentially, what we're going to be doing going forward is not really changing this portfolio for the next 2 months. What we might be doing is trimming a bit of profits as some things succeed to lower the risk. And then in 2 months' time, we're going to reevaluate. It's going to be a new year. It's going to be the end of January. It's going to be after Christmas. And 2024 is going to be a great year for us. Guys, I'm just getting warmed up on eToro. To all of my new followers and copiers, to my friends and family, thank you for supporting me. And if you're new and tuning in, welcome to the journey. We're going to have a hell of a ride, and we're going to learn to be financially independent together. I hope this gives you the courage to make your own portfolio one day as you become financially independent. Have a wonderful day, guys. I hope you're doing well, and I'll catch you all next time. All the best. Alon.